Welcome to the Deep Dive, episode 47. Today we're digging into something really interesting, a question that came in from you, Adam, out in Mesa, Arizona. Thanks for sending that in.
Yeah, great question. And it actually fits perfectly with our current season 4.
Right, which we've titled The Retirement Blueprint, Mastering IRAs, 401ks, and more.
Exactly.
And helping us unpack this, as always, is Katie St. Nours, certified financial planner, tax strategist, and the producer of this deep dive conversation.
Glad to be here.
So Adam's question, and honestly it's one I think a lot of you are probably wondering about too, is basically, can you hold actual physical gold in your standard 401k?
Mm-hmm. It's definitely a hot topic. People hear about gold, diversification, hedging against inflation.
Yeah, all that. It sounds appealing, right?
Yeah.
So let's break it down. First off, can you just buy gold bars and have them sit in your regular workplace 401k?
Okay, yeah, let's tackle that head on. For the vast majority of people with a, typical employer-sponsored 401k plan, the short answer is going to be no.
No. Okay. Straightforward, I guess.
Generally, no. You usually can't directly purchase and hold physical gold bullion or coins inside that specific type of account.
Right. So it's not like adding another mutual fund option. Why is that? What's the block?
Well, there are really two main reasons. First, think about the investment menu in your 401k. It's usually pretty limited, right?
Yeah, a list of funds, maybe some ETFs, company stocks sometimes.
Exactly. It's a curated list, typically focused on those kinds of things, mutual funds, index funds, ETFs. Your plan administrator just isn't set up to handle, buying, storing, and insuring physical commodities like gold bars.
Okay, the infrastructure just isn't there. They don't have a vault downstairs.
Pretty much, yeah. And the second big reason comes down to IRS rules. The IRS generally prohibits IRAs and 401ks from investing in something they call collectibles.
Collectibles.
Yeah.
And gold falls under that.
Most physical precious metals do, yes, like coins and bullion. Now, there are some very specific exceptions, but standard 401ks aren't designed to meet those exceptions.
Ah, okay. So IRS rules and the basic setup of the plan kind of slam the door on holding physical gold directly.
For the typical 401k, that's generally the case.
But are there ways you might indirectly get some gold exposure within that same 401k? Maybe it's already in there somewhere, or could be?
Yes, potentially. While physical gold is unlikely, you might find indirect ways if your specific plan offers them. It means you got to look closely at your investment options.
Okay, what sort of options?
Well, one possibility is gold ETFs, exchange-traded funds.
Right, I've seen those. Things like GLD or IAU. Those track the price of gold, don't they?
Exactly. Some 401ks might offer those. These funds aim to mirror gold's price performance, often by holding gold in trust or using futures contracts. So you're not holding the metal, but your investment value moves, kind of like the price of gold does.
Okay, so that's one route if it's on the menu. What else? Any other hidden gold connections?
Another way is through gold mining stocks or mutual funds that invest in mining companies.
Ah, so investing in the companies that dig the gold out of the ground.
Right, or refine it or explore for it. Your plan might have funds that hold shares in these kinds of companies.
Trade in your boring job for a brilliant career using Adobe Creative Cloud. Start learning now with the free trial link in the description.
So if gold prices go up, those companies might do better and the fund value increases.
That's the idea, but it's really important to remember your investment performance there depends on the companies, not just the gold price itself.
Okay, good distinction. Management issues or mining costs could affect the stock even if gold is up.
Precisely. It's an indirect link influenced by lots of business factors.
So the actionable step here for Adam and anyone listening is really to log into their 401k account online, pull up the plan documents, and scrutinize that list of investment options.
Yes. See if any gold ETFs or mining-focused funds are actually available to you within your current plan. That's step one.
Okay. But let's say someone really wants the physical metal in their retirement savings, the actual gold. You mentioned rolling funds over. How does that work?
Right. So if holding physical gold is the main goal, the most common path involves moving money out of, say, an old 401k from a previous job.
Okay, an old one usually.
Typically, yeah. You roll those funds into a spiral type of IRA called a self-directed IRA or SDIRA. People often call these gold IRAs or precious metals IRAs.
Self-directed IRA, gold IRA. Got it.
Yeah.
So you generally can't do this with the 401k at your current job while you're still working there?
Usually not, no. You typically need what's called a triggering event, and the most common one is leaving that employer. Once you leave the job, you can usually roll that 401k over.
Okay.
Now, some plans might allow for what's called an in-service rollover after a certain age, maybe 59 and a half, but that's really plan specific. You'd have to check.
Understood. So, assuming you are eligible, maybe you left a job, what's the first step to set up this gold IRA?
The absolute first critical step is choosing the right custodian. You need a custodian or trustee that specializes in self-directed IRAs and specifically handles physical precious metals.
So it's not your average brokerage firm.
Definitely not. Most standard IRA custodians don't deal with physical assets like gold. You need one experienced in the IRS rules, the storage requirements, everything involved. So research is key here. Find a reputable gold IRA company.
Okay, find a specialist custodian. Then what? Just open the account.
Pretty much. You go through their standard account opening paperwork to establish the self-directed IRA.
And then get the money moved over from the old 401k.
Exactly. And how you do this is important. The highly recommended way is a direct rollover.
Direct rollover, meaning?
Meaning the money goes straight from your old 401k plan administrator directly to your new SDIRA custodian. It never touches your hands.
Okay, why is that better?
It avoids any potential tax headaches or penalties. The alternative is an indirect rollover.
Which sounds less good already.
Yeah, usually it is. With an indirect rollover, they send you a check. Then you have only 60 days, a strict 60 days, to deposit that exact amount into the new gold IRA.
And if you mess up the timing, or spend some of it?
Big problems. The IRS could treat the whole amount as a taxable distribution. Plus, if you're under 59 and a half, you could get hit with a 10% early withdrawal penalty on top of the income tax.
Ouch. Okay, direct rollover it is. Very clear. So the money lands in the gold IRA. Now you buy the gold.
Now you buy the gold. You instruct your custodian to purchase specific types of gold that meet IRS requirements.
Ah, so there are rules about the kind of gold, too.
Oh, absolutely. Very specific rules. You can generally buy certain government-minted coins like American Gold Eagles or gold bullion bars that meet minimum fineness standards. Usually that means 0.995 pure, so 99.5% pure gold.
Okay, so really high purity stuff, not just any old gold jewelry or collectible coin.
Definitely not. It has to meet those IRS specs. The purchase is typically made through a precious metals dealer that works with your custodian.
Right. And then, the exciting part, you get your gold delivered, stash it in a safe.
No, absolutely not. This is probably the biggest misconception and a critical point. You cannot take personal possession of the gold held in your IRA. The IRS requires that the physical metal must be held by an IRS-approved depository or custodian.
So it goes into a secure vault somewhere managed by a third party.
Exactly. If you take it home, put it in your personal safe deposit box, anything like that, the IRS treats it as if you took a distribution from your IRA. That means taxes, penalties, the whole deal. It voids the tax advantage.
Wow, okay. That's huge. So the gold is in your IRA but not in your house.
You got it. Super important distinction.
Now, what about folks who are self-employed or have small businesses? They might have different 401k options, like a solo 401k. Does that change things for gold?
It potentially could. A solo 401k or some other self-directed 401k plans designed for the self-employed might offer the flexibility to invest directly in physical precious metals.
I might.
Yeah, it really depends on the specific plan documents and the custodian running that solo 401k. Even if they allow it, you still have to follow all the IRS rules about purity and third-party storage we just talked about. Honestly, even for people eligible for a solo 401k who want physical gold, rolling funds over to a self-directed IRA often ends up being the more common and sometimes simpler route specifically for holding metals.
So it seems the main hurdle is always that IRS rule about holding physical collectibles and the storage requirement, less about the specific type of 401k.
That's a good way to put it, yeah.
Okay, so if someone is seriously thinking about going down this gold IRA path, what are the big things they absolutely need to keep front of mind? What are maybe the downsides or complexities?
Trade in your boring job for a brilliant career using Adobe Creative Cloud. Start learning now with the free trial link in the description.
Well, fees are definitely one. You mentioned infrastructure earlier. Setting this up isn't free.
Right. I imagine it costs more than just having a regular IRA with stocks and bonds.
Generally, yes. Gold IRAs typically come with higher fees. You'll likely have setup fees, annual administrative or custodial fees, and you'll definitely have storage fees from the depository holding your metal. These can eat into returns over time, so you have to factor them in.
Okay, fees. And we hammered this already, but those IRS rules on purity and storage.
Non-negotiable. You have to get them right. Strict adherence is crucial. If you buy the wrong kind of gold or try to store it yourself, you could blow up the tax advantages of the whole account.
Yeah, messing up with the IRS is generally not advised.
Definitely not.
What about the actual buying and selling? Any catches there?
Yeah. Be aware of dealer markups and spreads. There's the spot price of gold you see quoted, but the price you pay a dealer to buy will be higher, and the price they offer to buy it back from you will be lower.
The difference being their profit, essentially.
Exactly. That spread can vary, so it pays to compare dealers and look for transparency in their pricing.
And unlike stocks or bonds, the gold itself just sits there, right? It doesn't pay dividends or interest.
Correct. Physical gold doesn't generate income. Its potential return comes purely from price appreciation if the price goes up.
And that price can be volatile, can it?
It certainly can be. Gold prices can swing quite a bit. While people see it as a long-term store of value, you need to be prepared for short-term ups and downs.
So, bottom line seems to be, do your homework thoroughly.
Absolutely critical. Research the gold IRA companies, the custodians and dealers, check their reputation, understand all the fees, make sure they know the rules inside and out. Due diligence is paramount here.
Okay, we've hit the mechanics and the cautions pretty hard. Let's maybe flip to the why. Why do people consider adding gold to their retirement portfolio in the first place, whether indirectly or through a gold IRA? What's the upside?
Well, the big one people talk about is diversification. Gold often behaves differently than stocks and bonds.
Meaning it might go up when stocks are down, or vice versa.
Yeah, it often has a low correlation, so adding some gold could potentially smooth out the ride for your overall portfolio, reducing volatility, especially during market turmoil.
Okay, not putting all your eggs in one basket, basically.
Right, and then there's the inflation hedge argument.
Ah, yes, the classic reason. Protect against rising prices.
Historically, gold has often held its value or increased during periods when the purchasing power of currencies, like the dollar, is eroding due to inflation.
So it's seen as a way to preserve wealth over the long term.
And that ties into the idea of it being a safe haven asset.
Right. People flock to it in times of crisis.
Often, yeah. During economic uncertainty, geopolitical stress, market crashes, gold is often perceived as a stable store of value, something tangible and historically resilient.
It has that long history, thousands of years.
It does. That deep history as a store of value gives it a certain appeal.
Okay, so real potential benefits for diversification, inflation protection, and stability. But given the complexities and costs, especially with physical gold, how much do people typically allocate? Is it like half your portfolio?
Oh, definitely not half for most people. Financial advisors usually suggest a pretty modest allocation if gold fits your strategy. Think maybe in the range of 5% to 15% of the total portfolio.
Just a slice then, part of a broader mix.
Exactly. It's generally seen as a supporting player, not the main star, in a well-diversified retirement plan.
All right. So Adam, to circle back to your original question, putting gold bars directly in your current workplace 401k is generally not going to happen.
Right. But you might find some indirect exposure through things like gold ETFs or mining stock funds if your plan offers them. You got to check.
And if you really want that physical gold in a tax-advantaged retirement account, the main path is usually rolling over funds, typically from an old 401k, into a self-directed IRA, a gold IRA.
That's the primary route. But as we've discussed, it's a path with its own very specific rules, costs, and things you absolutely need to understand.
Yeah, especially those rules about the type of gold and the fact that you can't store it yourself.
Yeah.
That and the fees involved.
Definitely. Ultimately, deciding whether gold in any form belongs in your retirement blueprint really comes down to your own personal financial situation, your goals, how much risk you're comfortable with, and your overall investment strategy.
Absolutely.
Thanks for joining us for this deep dive.
It's been a pleasure.
We'll see you next time.
See you later.
Okay, great. That's a wrap. I'm Katie St. Ors, and let me send out a huge thank you for listening. If you want more content on personal finance and small business, head over and find me on YouTube. You can also find me on Spotify, Amazon Music, TikTok, and Apple iTunes. Thanks again for tuning in, and I'll catch you on the next Deep Dive podcast.